Hello dear viewers, hope you all are doing well. Welcome to revision time. We are studying bank reconciliation system of class 11. In our previous video, we studied about the meaning of bank reconciliation system, like why do we prepare this statement, what is the need of preparing the statement. So we studied that when there's a differences between the balances of cash book and the balances of passbook, there's a need to prepare a BRS statement to rectify and tally why this difference exists, why there was this difference, what was the cause for the differences. So this is what we studied here. We also studied about the reasons for its preparations, and most important, we studied the causes. What were the different causes for this differences? One was the time difference, the other one was the errors made by both the ends. Next, we looked into a simple understanding problem. We tested our understanding whether about time difference and the errors made by the businesses. We looked into a small example. If you have missed the previous video, attaching the link in the description box, please check out. And if you have missed subscribing our channel, please hit on subscribe and hit on the bell icon so that you do not miss important video notifications. Today we will be studying more about bank reconciliation system. By now it's very clear to us that there are two books, Cashbook and Passbook. Cashbook we refer cash at bank account, and Passbook is the record of transactions that that is taking place in our bank account. When the balances do not match, we prepare a statement, bank reconciliation statement. Now there is an important thing to remember, that is, with cash book, debit is always plus and credit is always minus. Why? What is the need that we have to always debit the plus and minus to be credited? If we analyze this, cash book is a real account, and according to real account, debit what comes in and credit what goes out. So whatever comes in is added and whatever goes out is subtracted, is deducted. So according to cash book, we have to always remember that debit means plus and credit means minus. Whereas for passbook, it's opposite. For passbook, debit is minus and credit is plus. Let us analyze here also. Passbook, bank account, transactions. So bank account is a personal account, and according to personal account, debit the receiver, credit the giver. So here debit is always deducted and credit is always added. So this is very important that you have to remember. Cash book, debit is added, credit is subtracted, and for passbook, debit is subtracted, credit is added. Next we will look into, there are two important balances which we have to remember according to cash book and passbook. There's something known as favorable balance. What is favorable balance? Means the balance which is positive balance. When we get positive balance is that cash book will be debit balance. We just looked that debit means plus. So for cash book there should be debit balance, and for passbook it should be credit balance, then it will be a favorable balance. When the unfavorable balance means the cash book will be credit. So cash book we studied credit is minus and the passbook will be debit. So here the passbook, when the passbook is debit, it will be unfavorable balance. For passbook we also called it as bank overdraft or unfavorable balance, when cash book is credit balance and the passbook is debit balance. So this is very important to understand about favorable and unfavorable balances. Here we will look into the format of bank reconciliation system. Here, when we are reconciling both the books, we reconcile it from both the perspectives. That is, we first take into account the balance as per cash book and make the necessary adjustments and rectifications and arrive at balance as per passbook and tally it. Secondly, we also rectify it taking into account the balance as per passbook, make the necessary adjustments and then find out the balance as per cash book and then tally both the accounts. First, let us look into the balance as per cash book. Let us solve few problems regarding our cash book. Then we will look into balance as per passbook. Now here, first the statement. The format of the statement would be bank reconciliation statement as on the date of the year, the date and the year when you were preparing the statement, date, particulars, amount and amount column for the plus and minus. Now, balance as per cash book, it is very important that to add checks issued but not presented for payment and any increase in bank account is to be added. Second, checks issued but not collected is to be deducted, less any decrease in bank account is to be deducted. Only two important things to remember here: to add issued but not presented and increase in bank account, to deduct whatever checks you have deposited but not collected and any decrease in bank account, and then we arrive at the balance as per passbook and find out the total gets tallied here. This is the format. Why we have to add this particular thing and why we have to deduct this particular transactions, I will explain you with the help of an example. So here we have a small problem. We will read out the question and prepare a bank reconciliation statement and tally the balances of both cash book and passbook. So let us read out the question first. From the following particulars of Mr. Vinod, prepare bank reconciliation statement as on March 31st, 2017. First, bank balance as per cash book 50,000. So here we have to always remember, if there might be chances they give it as like bank debit balance as per cash book or bank credit balance as per cash book. So we have just looked into bank debit balance is add, which is we have to write in our plus column, and bank debit balance bank credit balance we have to write it as our negative balance. Here it's not mentioned, so we will consider it as a positive balance, a favorable balance itself. So on March 1st, balance as per cash book 50,000. Next, checks issued but not presented for payment 6,000. From here it starts add. First we will add the important transactions and then we will deduct the transactions. We will look into what transactions we have to add. Checks issued but not presented for payment. We have to add this transaction. Why do we have to add is that checks issued, we have two books, that is we are looking into two books, that is cash book and passbook. Now let us assume in both the books we have different balances of rupees 50,000. Both the books balances rupees of 50,000. Now checks issued but not presented for payment. In that case, what did we do? When we are issuing this check, we deducted 6,000 rupees from our cash book and presented it for the payment. But in bank, the transaction has not yet taken place. It's not yet presented for the payment, which means that 6,000 is not deducted from our account, because of which there's a difference between cash book and passbook. We have deducted the balance well in advance from our cash book, but there's no difference. But there is no transaction for the same in our passbook. In that case, what we have deducted, we will add it back again to bring to tally our both the balances. So checks issued but not presented. 6,000 rupees, we will add it. Next transaction. The bank had directly collected dividend of 8,000 rupees and credited in the bank account but was not entered in the cash book. So when we studied the causes for the differences, we studied there was time difference and there was errors made by the both the ends. So now time difference, this is a cause of time difference, that banks have collected the dividend, but in that case when they have collected there will be the entry found in the passbook, but the firm is not aware, the firm don't know that they have received 8,000 rupees dividend in their account, because of which there's difference in the both the accounts. So we know that this is we are receiving means because of which the balance will be increasing, so any increase in balance has to be added. So dividend collected rupees 8,000. Next, bank charges 400 were not entered in the cash book. Bank charges was deducted from our passbook. Charges will be deducted naturally. So it is deducted from our passbook, but the firm has no knowledge about it. They are not aware that 400 were deducted as bank charges. Now we have to deduct it in our cash book also. So we will less bank charges, that is 400. Next, check of rupees 6,000 was deposited but not collected by bank. Here again check was deposited. We have two books, cash book and passbook. Let us again assume that we will have a balance of rupees 50,000 in the both the books. Now check is deposited but not collected by the bank. So let us assume that our customers have paid us through check of rupees 6,000, and when we are receiving the payments, we obviously add it in our cash book, but it is deposited in the bank, but the bank has not cleared the check. They have not collected the amount in our account. In that case, there will be no entry found for the same in the passbook, because of which there's difference. So what we have already added it and we bought our balance of 56,000, but passbook there's no addition, there's no credited, the bank has not credited our account, because of which there's no transaction happening. So whatever we have added, we will deduct it. So less check deposited. But not collected, that is 6,000 rupees. Now let us find out the total of both the account. Balance as per passbook. Total should be tallied. So here the total of the first column, debit column, is 64,000 and the total of the credit column is 6,400. So 64,000 minus 6,400 is 57,600, and both the accounts are tallied. So balance as per cash book is 57,600. It's a credit balance, so it will be a favorable balance, and the total is tallied for both, that is 64,000. So this is how we have to analyze the transaction and then record it in our bank reconciliation statement and rectify the balances and then tally our both the books. So just to summarize here, other important thing is that checks issued but not presented has to be added, and check deposited but not yet collected has to be deducted. So this is a small problem for the balance as per cash book, where we rectified and found and verify the balances and then tally our statement. So very important thing to remember, first one, checks issued but not presented has to be added. Why we have to add? Because there is no transaction found in the passbook. For that case we have to add it. Secondly, we have to add any increase in the balances of bank account. Obviously there will be increase in the cash at bank account too, so it has to be added. Secondly, any decrease in the balances of both passbook account will be also decrease in the balances of cash at bank account too. Secondly, checks deposited has to be deducted because there's no entry again in our passbook. These are the four important things to remember. And then when we arrive at the balance is favorable balance because it's a credit balance, and then our statement is tallied. This is it for today's video. In our next video, we will study more about bank reconciliation statement. Until then, subscribe to our channel, hit on the bell icon, share our videos with your friends, and happy learning. Signing off.